Okay, morning everyone. Looking at the US stock markets, the Dow has again recovered from the triple bottom formation around the 23,500 points level. Since then, it has rallied strongly towards the 25,000 psychological level. It formed a reversal candle, forming a shooting star candle along the 25,000 psychological level. And the next day itself, we did see the gap down formation. And since then, the Dow has been consolidating over the past 3 trading days. And overnight itself, we did saw the Dow has fallen about 55 points or negative 0.2% due to the renewed concern over the trade tension between US and China after President Donald Trump and China has met, and there was no concrete conclusion on that. So moving forward, we're expecting further pullback, just a mild pullback on the Dow Jones towards the 24,500 points to see how it holds there. If the 24,500 points cannot hold, then further pullback will be seen towards the 24,000 psychological level before the next recovery will to resume back towards the 25,000 or even towards the 25,800 points level on the Dow Jones index. Similarly, on the S&P 500, we did see the S&P 500 has recovered from the 2600 psychological level. Since then, it has already sharply towards the near the 2750 and subsequently staged a mild pullback and consolidate on a sideways pattern. So this could be the healthy rally, short-term rally, pullback, and the continuation pattern for the S&P 500 towards the 2750 and subsequently towards the 2800 psychological level. And the good thing on the both the Dow and the S&P 500 is that the uptrend in that orientation formation was recently established again. The EMA 20, 60, and 120 has been in line over the past 2 to 3 trading days. Okay, some of this on the crude prices. Crude prices has again breached above the resistance along the $66 barrel mark. Since then, the crude prices continues to maintain its position above the EMA 20 level. And recently, it did breach above the 70 and also maintain above the $70 barrel mark. So for now, we are expecting a further consolidation to beckon between the 70 towards the $72 barrel mark. Until we can see a breakout above the 72, only we can confirm that the crude prices could be heading higher towards the 75 or even towards the 80. In the meantime, should the crude prices pull back below the 70, then the next defense will be located towards the $66 barrel level. The crude prices has closed on a flattish note on overnight after erasing all its intraday gains as the US export level rose to a record high level. Okay, some of this on the local front. The FMKLCI has earlier on pulled back from the recent all-time high of 1895 levels towards the EMA 120 or even towards the 1800 psychological level. After hitting the 1800 psychological level on intraday basis, we did see the FMKLCI has formed the bullish engulfing candle, and subsequently the key index has clawed its way back above the 1840 level. So moving forward, we're expecting further consolidation phase on the FMKLCI, and any pullback for now will be a healthy minor pullback towards the 1840 for investors to digest its previous gain before the next uprun to resume towards the 1880 or even towards the 1900 psychological level. On the FM small cap wise, we did see the FM small cap index has from the short-term breakout pullback and the continuation pattern of formation as the FM small cap index has formed the bullish engulfing candle, and subsequently we did see the fall through buying interest was noted over the next couple of days. However, on yesterday itself, we did see the FM small cap index has formed the reversal pattern, forming the shooting star candle. So this could be the start of the minor pullback on the FM small cap index towards the 14,300 points level. If we can see some of the recovery pattern like a bullish engulfing candle similar on the 14th of May, then we can confirm that the FM small cap index could be heading higher back towards the 15,180 points level. Some of the stocks that we can watch out for firstly would be Bowes. Bowes has hit an all-time high of around the 1.45 level. Since then, our price has staged a pullback, a sharp pull back towards the 84.5 cents level. After hitting the 84.5 cents level, we did see a recovery on BAWES above the EMA on 120. It staged a mild recovery pattern and traded on a sideways pattern over the past couple of days. But the good thing is that BAWES has retested the 1 ringgit and 23 cents resistance level yesterday, accompanied by some of the rising volumes being traded over the past couple of days. So for now, we'll be monitoring for the breakout above the 1 ringgit and 23 cents. Upon the breakout of 1 ringgit and 23 cents, we can trade BAWES towards the 145 or even towards the 1 ringgit and 60 cents level, with your stop loss point located below the 1 ringgit and 1 cents level on BAWES. On indicators wise, everything appears to be quite positive right now. As you can see that the MACD indicator has really showed buy signal yesterday, whereas the RSI has also risen above the 50 level on yesterday as well. On our Pavilion REIT, it's still on a downtrend formation, so for now, any recovery will be just taken as a technical rebound. Price has again hit the recent low of around the 1 ringgit and 32 cents level. Since then, price has staged a strong recovery pattern towards the 1 ringgit and 50 cents. It rejected the EMA 120 level and pull back and traded on a sideways pattern. But the good thing on Pavilion REIT is that we are seeing some of the accumulation was taking place throughout the 1 month trading period. And as yesterday, price has already formed the bullish candle on top of the EMA 20 level as well. So for now, we're monitoring for the breakout above the 1 ringgit and 50 cents. Upon the breakout of 1 ringgit and 50 cents, we can trade Pavilion REIT towards the first target price at the 1 ringgit and 60 cents or even towards the 1 ringgit and 65 cents level, with your stop loss point located below the 1 ringgit and 42 cents level for Pavilion REIT. Upon the breakout of 1 ringgit and 50 cents, we could anticipate for the MACD indicator to give us a buy signal, whereas the RSI has really risen above the 50 level yesterday. For DNONs, earlier we did mention on DNONs that we are seeing a lot of accumulation was taking place over the past 1.5 months trading period that we are going to monitor for the breakout above the 33.5 cents level. So on yesterday itself, we did see price has made a good breakout above the 33.5 cents and also closing above that. So following the breakout above the 33.5 cents, we could see further upside for DNONs towards the 36 cents or even towards the 38.5 cents level, with your stop loss point located below the 31 cents on DNONs. Last two company for today, firstly would be KPSCB. KPSCB has rallied for the past on just 2 days, hitting an intraday high of 88 cents. After hitting an intraday high of 88 cents, forming a shooting star candle, we did see KPSCB has pulled back. It gave up all its previous 2 days gains and traded on a sideways pattern over the past couple of days. Recently, we are seeing some of the short-term breakout pullback and continuation pattern was being formed on KPSCB above the 58 cents level. So for now, we're monitoring for the next breakout above the 60.5 cents. It did breach above the 60.5 cents on yesterday itself, but it did not close above the 60.5 cents. So for now, we'll be monitoring for the breakout of the 60.5 cents. Upon the breakout of 60.5 cents, we can trade KPSCB towards the 65 cents or even towards the 70.5 cents level, with your stop loss point located below the 54.5 cents level for KPSCB. And recently, during this short-term breakout pullback and continuation pattern, we are also seeing the MACD indicator has seen the uptrend intact orientation being formed. The EMA 9, 20, 60, and 120 has been in line and is going to fan out soon. Last company for today will be Post Malaysia. Post Malaysia has seen some of the selling pressure towards the 3 ringgit and 6 cents level. After hitting the forming the bearish candle on top of the 3 and 6 cents, we did not see any follow-through selling pressure. Instead, price has experienced a technical recovery and traded on a sideways pattern over the past couple of days. So for Post Malaysia, what we need to do is we're going to monitor for the breakout above the 3 ringgit 80 cents level, as price recently has staged on the recovery pattern over the past couple of days. So upon the breakout of 3 ringgit 80 cents, we can trade Post Malaysia towards the 417 or even towards the 4 ringgit and 42 cents level, with your stop loss point located below the 3 ringgit and 45 cents level on Post Malaysia. Everything appears to be quite positive on Post Malaysia right now, as you can see that the MACD indicator, the MACD line has been forming the higher high and also the higher low formation. The MACD line has also risen above the 0 level as well, whereas the RSI has been floating mostly above the 50 level over the past 1.5 months trading period. If you have any questions, you can put in the chat box and I'll reply you shortly. There's one question here on JB on LC Titan. On local chemical Titan, I think someone has then mentioned that we are seeing the this could be just a technical rebound on LC Titan towards the 5 ringgit 80 cents 81 cents level. So any recovery from that point onwards, it will be this taken as a selling the strength strategy. And recently, it did after it unable to cross above the 5 ringgit 81 cents, we did see the price has subsequently gapped down, reaching below the 5 ringgit 49 cents support level. So for now, we are expecting price to see further weakness towards the 5 ringgit 4 cents. If the 5 ringgit 4 cents cannot hold, then the last defense to be located towards the 4 ringgit 59 cents level on LC Titan. For now, if if you did not cut loss on this counter earlier on, any recovery from now will be also taken as an opportunity for us to sell in the strength strategy towards the 5 ringgit 49 cents, as we are anticipating for the price to see a further pullback. So for now, gains is limited towards the 549, losses will be located towards the 504 or even towards the 459 level. There's another question here on DRB Highcom. DRB Highcom, the chart is quite similar with Lotte Chemical or Titan. Price has again hit the recent low of 198 cents level. It did stage a technical rebound. Subsequently, the rebound did not last long, and price pulled back. And recently, we did see price has also violated below the 198 cents support level on yesterday itself. So that is an indication that for us to cut loss on yesterday. If you did not manage to cut loss on yesterday, then the final defense, the next defense will be located towards the 1 ringgit 70 cents or even towards the 1 ringgit 52 cents level. And if price were to pull back and stage a rebound from this point onwards, so from that point onwards, we could take this opportunity for us to sell into strength towards the 1 ringgit 98 cents level. Until we can see the a breakout, a pullback, and the continuation pattern, only we can confirm that the DRB Highcom could be forming the recovery pattern. Until we can see a higher low formation, only we can confirm price could be heading higher. But for now, we are seeing the lower high and so the lower low formation, implying that the downtrend is still intact on DRB Highcom and also LC Titan. If there's no further question, then we'll end the morning briefing for today. Thank you.